today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos daily, so I highly encourage you to double check the latest videos on my channel, so that way you get the most up-to-date information. And before I get to the technical analysis portion, I'm going to go over the economic calendar. So for Friday, which is the most important part of the week because inflation numbers are coming out, but for Friday, July 26, 2024, at 8:30 a.m., we have the following coming out: personal income nominal, personal spending nominal, PCE index, PCE year over year, Core PCE index, and Core PCE year over year. Again, the Fed regards these numbers as way more accurate than CPI and PPI. So previously we got 2.6 for what they're going to be looking at, by the way, is the Core PCE, which doesn't have energy in the mix, and previously came in at 2.6. This time expecting 2.6 this time around. And at 10 a.m., by the way, as well, we have consumer sentiment final. Now, in terms of analysis portion, I will say for the S&P, Nasdaq, and the Dow Jones are all pointing to the downside. Interesting enough, usually I would say that in terms of direction, by the way, I'm basing this direction based off of the MACD lines, which indicate if it's a bearish or bullish movement we're in, and what the future movement somewhat nearby is coming up. And usually I will say that you can't really regard these because you're waiting on data to come out. But because the data is pretty low expected, I would say, for the most part, versus the indications for all three, S&P, Nasdaq, and Dow Jones, are kind of pointing to the downside. In my opinion, again, this is all just my opinion, so please do your own due diligence and research before buying and selling. I think if the numbers come in better than expected, so inflation is getting lower, the market could go up, but ultimately, I think by midday towards the end of the day, the markets will still probably come down, just because the indications seem a little bit strong on the downside. Now, it's possible, obviously, that the markets will still go up, because what we could have is good inflation numbers, so better than expected. Markets go up, and then somehow the tech sector pulls us up even further, and then we'll start testing up the higher limits, and which I'll go over soon. But ultimately, I think it might be coming down downside. It'll be even worse, though, if the numbers come in worse than expected. So inflation is increasing. I'm not necessarily expecting that personally, just because somehow the numbers always keep meeting expectations or slightly above. And even if it's slightly above, so inflation comes in a little bit higher, the market somehow disregards it a little bit. So it might adjust a little bit, but ultimately ends up disregarding it, which could still be the case tomorrow. But the indications are decently strong, I would say, for the downside for all three. So now first, before I go to over the Dow Jones, I'm going to go through the S&P first, which I'm going to be looking at the SPY, which is an ETF for the S&P 500. And we ended up pretty much going to close to this level right about here, about $548 and some change, but not necessarily. We have $547 and some change. Mind you, we closed at $538 and some change. And based off what I'm thinking is going to happen personally, if the inflation number comes in worse than expected and the market does drag down, the level I think we're going to go down to is right about here, which I mentioned yesterday, which is roughly about $531 and some change, give or take. Ultimately, I'm expecting a false breakout anyway to the 530, probably potentially bouncing off the 530. And the reason why I'm getting this is because horizontally, you can see right about here, 1, 2, 3, 4 touch points, arguably 5, maybe 6 resistance touch points, and I think there's a small one right there, and then 7, 8 support touch points. So 531 and some change, in my opinion, will be most likely, in my opinion, support bounce off potentially. Not necessarily bounce off, but somewhat of a support, right? Because it could slightly bounce off and then go up a little bit and then come down and break through anyway and then keep going lower. But indications are pointing to the downside. Now, if we were to bounce up because the inflation numbers they come in better than expected, the first level of resistance I'm expecting that's pretty much going to hold up is right about here, which is about the 545, 546 range that we pretty much kind of saw that it kind of slows down anyway. It's right about here within the zone 545, 46, and then ultimately hitting potentially the moving average and the previous spike up to anyway, which is about 547 and some change. And then within this zone right about here, 548 and some change. And then ultimately, I think because the indications are pulling us down, so this is a scenario if inflation number comes in better than expected, and it's not just like flat, it's actually truly better than expected, so it's not just by 1 point or anything, then we'd be going to 550 and some change, and which collides kind of with the moving average a little bit, and then I think we'll be getting pulled down unless the tech sector pulls up like crazy, because the indications are pointing to the downside, and again, from what I'm seeing and based off my opinion. So 550 and some change, if that's inflation number comes in better than expected, and then ultimately get it pulled down. If we do get pulled down, we could get either pull down to somewhere between 545 and some change, or the 542 and some change, give or take around, which that 542 is based off this zone right about here. Yeah, there's resistance levels and a little bit of false breakouts, and then support levels and a little bit of false breakouts, but around 542. Now, it's arguably hard to tell if we actually will stop within that zone, because when we saw today's trading day, during after hours and pre-market, we kind of saw some levels between there, but during the trading day, we didn't see anything being stopped or slowed down within that range. So it could be coming down pretty drastic back down to this level of 538 and some change, but we'll have to see. It's going to be strange to tell, for example, if inflation number comes in better than expected and we go up, and then how the downside is going to be. We'll have to see that a little bit, but ultimately I'm expecting inflation number coming pretty much flat, market maybe spiking up a little bit to the 545, 46, or potentially 542 and some change, and then coming down. Ultimately, this is the play I think is going to happen, and then come down to 531 and some change, most likely, as opposed to inflation coming better than expected and it going up and then coming down by the end of the day. Now for QQQ, I'm going to be looking at QQQ, which is an ETF for Nasdaq. Pretty much the same play for the most part. So ultimately, I'm thinking it's going to come down to, right now, mind you, we close at $458 and some change. And I think it's going to come down to pretty much the zone right about here, $445 and some change. When I checked, so either 448 and some change to 444 and some change. And the way I'm basing that off of is potentially coming down to, where is it, right about here. So on the high side of the resistance side a little bit, combined with a little bit of a support drop, so that's 448 and some change, and then the bottom of the not potentially false breakout, but you can see a little bit of support levels across horizontally with the support level right about here, and I guess it's showing 443 right now, but when I checked it was 444, but 443, 444 and some change within this zone, and that would basically be essentially if inflation number comes in worse than expected, and we just drop down. Now if it comes in flat or better than expected, I could see us spiking up essentially to $465, and I'm basing that off of the previous spike ups to this zone right about here, and you can see a little bit of a tick right there and tick right there. So $465 and some change, and then ultimately come back down, not come back down, but come down to this zone most likely. So about 448 and some change to, if it's drastic, down to 444, 443 and some change to 448. That's if inflation comes in pretty much, I would say, flat or a little bit worse than expected. Now, if it comes in better than expected, / maybe flat too, if you want to include that, and it spikes up, we're going to meet resistance at the 465 going to the upside. Again, mind you, close at 458. And then the next resistance would be off the moving average, 471 and some change. And then the next zone would be combined with the moving average, 476 and some change, with the 477 and some change. So 446, 447, 476 and 477 and some change, because that would hit this upward trend resistance line dating back since 2010. So if I zoom in, since 2010, we had an upward trend resistance line. Mind you, the markets were still going up though. False breakout since 2020 to 2022. Came back down underneath it. This was of March of 2024, if I'm not mistaken. Yeah, March of 2024. Tried to pass it, couldn't pass it. And then as of recent, which was in June 12th of 2024, give or take, broke through it, and then now we're back underneath it. So that is going to be about 477 and some change. So again, moving average is pretty much about 476 and some change, give or take, 475, I guess, and then 477 and some change. Because indications are pointing to the downside, I don't think we're going to pass the 2010, in my opinion. I think that would be the limit, and then either get knocked down and then head back down to potentially maybe close at 473, and then proceed moving down probably by the Monday trading day. So yeah, probably spike up to 477 and some change, and then close the day off by 473 maybe, and some change, and then wait until Monday to keep going lower. That's if inflation number comes in better than expected, more so than just flat, in my opinion. Again, this is just my opinion, so please do your own due diligence and research before buying this time. Now for the Dow Jones, still showing to the downside as well. It's the reason why I'm thinking more strongly that's going to go to the downside is for the fact that they're all indicating strong indications to the downside. Usually it's at least two of them, so like maybe S&P and Nasdaq, and then Dow Jones showing somewhat of a flat / upside, but these are all showing strong downside. But the problem is I usually don't like expecting a certain specific direction since that there's like data coming out. So for example, inflation numbers coming out tomorrow, I'd rather wait and see the inflation numbers, data and all that stuff before making a decision on direction. But the indications are pretty strong. So, but anything is possible at the end of the day, right? Now for the Dow Jones, we closed at 39,935 points. And if we were to go to the downside, I would assume we would hover around this moving average right about here, 39,601 points. Now, mind you, this upward trend resistance line dates back since 2021. We have this upward trend support level dating back since April of 2024, I believe. Yeah, April of 2024. If you think we're going to just drop down to this level of support, just to show you what level we're looking at, roughly, give or take, is about 38,467 points, give or take. But ultimately, if we do break this moving, actually, no, this moving average is pretty much close to everything else that I was looking at also earlier. But essentially, basically, the moving average is about 39,604 points, give or take. But we have support at about 39,500, 39,450, give or take. Now, if the inflation number comes in better than expected, potentially slash flat, we could spike up and then hit this resistance level dating back since 2021. Like I don't know, I showed earlier though in another previous videos, but upward trend resistance line, 2021, 1, 2, 3, 4 touch points, and technically 5 right about here. When I zoom into those 2 touch points at the end I showed, split off to 2 each, 1, 2, 3, 4, and then you can see a little bit of resistance plus somewhat of a support bounce right about here midway. But yeah, so basically looking at resistance about 40,333, give or take, plus the moving average colliding with the previous like levels of highs kind of thing, about 486 points, so 40,486 points. And then the next level I would be looking at would be about 40,760 points, give or take. The only thing is though, indications are pointing to the downside, so I'm not expecting anything past the moving average personally. So within the zone about 40,000, you could just look at 40,500 basically. I don't expect us passing 40,500 because, again, indications are all pointing to the downside. But that's basically it for today's video. Thanks again for watching. I do appreciate it. If you found it helpful, consider dropping a like. It does help with the channel, so thank you so much for that. I do appreciate it. And I do post these videos daily, so I highly encourage you to subscribe/follow on both like my channels where you're watching it. And that's basically it. Thanks again for awesome support. Appreciate it. I'll see you guys in the next video. Take care. Peace.